Hi everyone, you may have gotten a notification of my previous video, but I didn't really like my analysis and I uploaded it because I had time pressure, or I felt time pressure, but now I have a bit more time and therefore I re-record my analysis, and hopefully you appreciate this one. So let's start with the micro bullish scenario where we're looking for a three-wave finished structure right on top of the target box for some nice support for then continuation to the upside in an impulsive structure. If we then look at this move towards the upside, there's a couple of reasons to say yes, this is likely, or where you say, well, I'm actually doubting about this. So first of all, this then has to be a wave 1, 2, and now we're looking for a bigger 3 towards the upside. In this particular scenario, what goes against a potential impulsive move is that the highest amount of volume of this move to the upside over here is right at the top. And usually that means that this is part of a wave 3 structure, after which you then expect a wave 4 and then another wave 5. And then inside this wave 5, you want to see lower volume. So basically a new high, but then a high made on lower volume. The thing is, we never got a new high on lower volume after this move over here. Instead, price moved to the downside much further than a wave 4 usually goes. Because if we look at a wave 4 and then a 1, 2, 3, 4 and then a 5 wave move, then a wave 4 maximum target is usually the 0.5 Fibonacci, which is over here. And you can see that many candles have closed below the 0.5 Fib, which kind of invalidates this whole move as a wave 4. So it's a little bit odd, and then the most amount of volume is in the high. Usually that is something that you see in a wave C or corrective structures or in an extended wave 5. So if this is an impulsive structure to the upside, then this wave 5 has the most amount of volume, which is relatively rare. Another thing then is that if this is a potential 5-wave move, then you have to count it like this in a potential wave 1, 2, 1, 2 for then a bigger 3 towards the upside. But counting this as a nice second wave 1 is not that easy, because then you have a wave 1, 2, 3, 4, 5. But this wave 4, as you can already see, is shorter in time than this wave 2. And usually I like a wave 4 to be longer in time, because based on Elliott waves and just probabilities in general in Elliott waves, a wave 4 tends to be longer in time compared to a wave 2. And that's also something that didn't happen. So if we then do look at things that are pro of this scenario, that are benefiting this scenario, basically, it has to do with this structure over here. Because if we are looking towards the downside, and in the bearish scenario, which I will share in a second, we're then talking about potentially a wave C towards the downside, which then is an impulsive structure. You want to quite often see a quite quick move to the downside, and then a wave 1, 2, and eventually a 3 to the downside. But the longer we are ranging over here, the more bullish it is. So you want to see price tumble relatively quick, because the longer we're staying here, the more bullish it becomes. And if we do go to the bearish scenario that I have over here, then we are looking at a WXY scenario. Within this wave W, a zigzag, which is then a 535 move to the downside, followed by a wave X, and then looking for a wave Y, which is then a flat scenario in a wave A, B, and then eventually a wave C to the downside. Now, if we zoom in to this scenario on the 30-minute, then what you can see is that this wave B actually retraced to the 1.236 taken from the high to the low of wave A, toggle on the wave B expanding flat targets, and you will see that the wick over here has hit the 1.236, which is part of the most common target area for a wave B in an expanding flat. But that then of course means you now want to see an impulsive structure to the downside. And what I like to see after a wave B is in is quite a fast and quick move towards the downside, but we are not getting it, right? We have been ranging here for a long time, and if this is a wave 1, 2, I want to be short and quick and then continuing to the downside in a wave 3. But then again, the longer we're ranging, the more bullish it is. And that is a bit of the issue that I had in my previous video, where I actually forgot to tell you, like, hey, we have been raging here for a long time and I don't feel good about that, right? I like to see a wave C being tuck, tuck, boom, right? Something like that. But that's not what we're getting at the moment. Now, if we do look at this bearish scenario, we're looking then for another low, where the most common target for wave C is in between the two 1.618, which is in confluence with the key level at 29.5k, and also in confluence with the target area for wave Y. But that also means that this target box over here, which has been supported 3 times, has to be broken. And this was a great support with a weekly naked point of control and a daily. So we have to wait what price is going to do. Also with the news that is coming up. Now this wave B did take the highs over here, so it took the double top that we have. Usually double tops and double bottoms are like a magnet for price, which again resulted then in a very big wick. But then again, after a big wick, taking a double top, especially after a wave B, looking for a wave C, you want to see a line to the downside, right? You want to see a quick wave C to the downside, and it just doesn't feel good to me that price has been ranging over here, and the fact that I forgot to say this in my previous video. So here you go. That's why I re-record this video for you right now. If we then look at the lower time frames, right, and in the bearish scenario you want to see a move to the downside, the only way you can count on this wave move to the downside in a 5-wave structure is this to be a wave 1, 2, 3, 4, 5. Then again, wave 2 over here is shorter in time than this wave 2, or this wave 4 is shorter in time than this wave 2, which is again not really something that you want to see, right? So in this particular scenario, you're then looking for a wave move to the downside, move up, and then a move down. And actually with the bearish scenario that I just showed you, where this is the high of a wave B and looking for continuation to the downside, I really appreciate the share that Kenny the Kid made in the Discord group. And I don't have the tab open actually, but what he said early in the morning at about 7 a.m. when I was recording the video and this move to the upside happened right at that moment, he was like, well, we might actually be in an expanding flat scenario where this then is a 5-wave move to the downside. And he actually got me thinking into that bearish scenario where this is then potentially an expanding flat. So thanks Kenny for actually coming up with this scenario where I started to look in more detail in the potential bearish scenario that we have. But as it stands, again, this range is taking a while. And if we look at the CVD divergences, as always, very, very important. We do have bullish divergences and the bearish divergences already played out. So very locally, we had bearish divergences, lower high on price, higher high on the CVD. I'll show it in a second. This low was taken, as you can see, played out. And now the bullish divergences also played out because this high has been taken. So that is very, very nice for then now a neutral CVD environment. If we go to the AGGR chart, I can actually show you that over here we had a lower high in price, higher high on the yellow CVD, bearish CVD divergences, the low was taken. But on the blue line, we started to create bullish CVD divergences, higher low in price. But if I drag my candle from the low over here, the 5-minute candle, to the low of this blue line, you will see that on the right side, this little top, this little drop over here actually went below the horizontal cursor line that I have, which means there's a bullish CVD divergences, but that one also now played out. So we are now in a neutral environment. Then finally, we do have news coming, and we have news coming at 2:30 p.m. Central East European time. So make sure that at 2:30 Central East European time, you're going to be trading safe because there might be some volatility kicking in. That being said, I hope you appreciate the re-recording of this video. Sorry that I had to re-record it, but I want to only give you the best analysis that I can with all the information included. I hope this video was helpful. Check out the CVD video if you're interested. And for now, thanks for watching and subscribing, and I see you at the next one. Bye bye.